Hello everyone, thank you very much for joining me for today's snapshot. Today we're going to be looking at JP Morgan. It's beaten forecast and it has released cash from its provisions for bad loans. But before we do that, please take note of the following important information. Please note that CFDs are high-risk products and that you should be completely aware of the risks that they pose. Also, please note that this is a general market commentary only and does not constitute investment advice. And finally, these are our sources of information. Okay, thank you very much for that. Now, JP Morgan's fourth quarter earnings per share were $3.79, beating the estimate of $2.62 per share. Of note, the bank released $2.9 billion from its provision for bad loans. CEO Jamie Dimon credited the vaccine and stimulus developments as contributors to this decision. This, as scenario probabilities were readjusted in favor of risk. Let's take a look at the chart, and we're looking at the daily Ishimoku, and I want to point out that the orange lagging line is above price. This is indicative of a positive momentum. I also want to point out that the forward cloud is moving in this northeasterly direction. What I want to focus on is price interaction with the black baseline. You can see after the results were released on Friday, the share has pulled back slightly. And I think if it pulls back towards the baseline, I'd like to see if it brings any bids in. In other words, is this going to be a dip in the uptrend? Let's end off with some key takeaways. JP Morgan beat forecast with an earnings per share of $3.79 per share. Significant cash was released from the bank's provision for bad debts. This is a positive sign. And the trend is ups, and pullbacks to the baseline are likely to be compelling. I hope you found this snapshot useful. If you did, please click on that subscribe button. I want to thank you for joining me today, and I look forward to speaking with you again in the near future.